Hey guys, how's it going? This is Corey Smith here with CoreFX. Just wanted to do a little YouTube video here. I'm going to start releasing some more content now that I got some things up and running a little bit better with the office and the setup and everything. So I want to do a video here covering some support and resistance, one of the most fundamental concepts there are in technical analysis. I'm sorry if it's a little loud in the background. Horrible rainstorm going on right now here in South Florida. Uh, Hopefully it's not too bad, a little tranquil sound in the background. But we'll go ahead and jump right in here. Again, I'm going to do a quick little video here on support and resistance. Not too quick. I'm going to actually go pretty in depth about it, but not as much as I cover with my students. Just the general major concepts and what we're going to be looking for and how to use them in the markets. Okay, so first of all, support and resistance are basically the guidelines that price action moves through. As prices trend up or down or sideways, there are areas in the market that price respects that make ceilings and floors all through the market that we refer to as support and resistance. And it's one of, as I said, the most critical, fundamental concepts there is to technical analysis. Doesn't matter what tool you're trading, what asset class, anything. Support and resistance is major, big time, and it's what controls the price's movement. So we'll go ahead and start with support. Support is basically going to be an area that price is going to respond to that is under price. So it's going to be essentially, think of it as a floor. As you can see here on this chart, price came down, hit this floor, bounced up, and right now again it's hitting this same floor. That is going to be support. This is going to be the area where we want to watch next time price hits it for it to react to it again. And basically it's a floor that's going to guide price and the price is reacting to it. Resistance is going to be the exact opposite. As you can see up here, price hit here and bounced lower. This is referred to as resistance. Price resisted this area, bounced off. With the support, it supported the area, price bounced off. So resistance is going to be an area above price that's going to keep price below it. These areas can be broken, but essentially what they are is guidelines and floors and ceilings that price bounces between as it moves around. So as you can see here, price tends to move up, hits resistance, comes down, hits support, goes up, hits a little bit of resistance here, moves sideways a little, finds a little support under there, then shoots up again, and price continues to move this way. Comes down, hits a little support there, eventually breaks it to this, comes back up, makes a new high, another resistance, back down, actually breaks that old area, but then establishes this here. So as you can see, price is just bound by these areas of support and resistance that kind of guide it as it moves. So one of the first concepts I want to cover is support and resistance is that the major mistake people make, especially early on in their Forex or any kind of trading career when they're looking at support and resistance, is going to be to take too much effort and time into thinking of it as an exact point on the chart. They try to line up these areas and make it an exact area to an exact pip number and think price is going to hit that and react immediately on that or hit that and break exactly through it. And that is not at all how it works. Support and resistance is more so a zone than it is an area of an exact pip. It's a really critical concept that you're going to realize the more you look at charts and the more you trade and the more you study this stuff, how relevant it actually is. But that's a major concept you want to learn, is that support and resistance are zones or areas, not exact numbers. Now, another thing that's big to know about support and resistance is typically when a support or a resistance is broken, it will then act as the opposite. So for example, let's just use this example here. Price came up, found a ceiling right there, found resistance, shot away, right? Eventually price came back up to it, broke through the resistance. Price came back down, and what did it do? Now it acted as support. Price hit off of it now as support, and it shot back up. This right here, this exact thing that took place right there is what we refer to as a retest. So this area of resistance was broken. Price came back to retest it now as a newfound support level and then continued higher. So that is another very, very, very important concept with support and resistance that is critical to learning and following and starting to watch for. So whenever you have an area that is an actual area of support and resistance that gets broken, we always want to watch to see if there is a retest, to see if price is going to hit it, break through, come back and retest as the opposite, and then continue onward. As you can see what price is doing right here as well, price had this support here established, had a tough time breaking through. When it did, it came back up to retest it. Now it's holding lower, rejecting off that. Whether it closes with a rejection wick like that and actually is a retest and continues lower, we'll see. But that is a perfect example as well of how it can work the opposite way. Support is established, it's broken, and then it acts as resistance, and price checks off. Okay. So the retests are a very big thing, and there's a lot of traders that will trade only retests. A lot of traders will enter, let's say they want to go long on the break of this resistance. They'll only enter if it's broken, comes back to retouch it, and then they'll enter right here when they see that price failed to break below it and go long. That's a very, very critical concept of this that some people use entirely and other people just watch for it and build it into their system in different ways. Another thing with this, we can use this exact same example for actually, is typically when there's a key area of support or resistance. Now, if you look at smaller time frames or even all these little areas within these, you can find support and resistance everywhere, but that's noise. We want to find the key major support and resistance areas. That is where price has the highest probability of responding to. So with these major areas, typically, when they are finally broken, you see them break in an area in a way like this. You see these expanded range candles? Look at the size of all the candles before it. And then look at these two candles. They are huge momentum, explosive moves that are most likely institutional investors or big-time banks trading these moves to cause liquidity to move the markets that strongly. That is a big sign that there are people watching this level. There's eyes on it, and when it comes back to it, it's going to respond to it. And also, when it finally does break these levels, it usually breaks pretty strong. So breakout traders catch, I tend to trade breakouts as well, catch strong moves because once this area is broken, it takes a big move to break it, and that's where there's a lot of momentum behind the trade, and the trade continues to go higher. Okay, so aside from the retest and acting support resistance being broken, acting the opposite way, we have strong candles break zones typically for actual support resistance. All right, so those are some major takeaways to use with support and resistance. Now I'm covering mainly just horizontal support and resistance in this video, which is these horizontal lines like this, but support and resistance has many different shapes and forms. Support and resistance can be a trend line. Sorry about that. It can be a trend line that comes through here. See? Trend lines act as support, 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 broken, retest, resistance. See this? It can happen with them as well. It can also be a Fibonacci line. Draw a Fibonacci from swing high to swing low. See the 50% Fibonacci here? That's acting as support. So there are many different things that can be support and resistance. SMAs as well, EMAs, any kind of moving average can be, pivot points, etc. Support and resistance are everywhere in the markets, and they are a major, major concept to know. So what I'm going to do now is go over the main characteristics that define a strong support and resistance area. Like I said, you can find support and resistance anywhere in charts. You can find support and resistance here. You can find support and resistance here. You can find it anywhere, but these intra-move support and resistance, these minor support and resistance areas, aren't really good for anything unless you're trading smaller time frames or stops and take profits. Maybe you could work them in. Other than that, as you can see with these, yeah, this was a support. But look at how it was violated. It wasn't even that big a candle. It was violated, violated, violated. We want major, major ones. And I'll break down right now with you the major characteristics that I use to determine if it is an actual strong area of support and resistance or not. Okay, so one of the first characteristic I use of a strong area of support and resistance is, in order for it to be valid, it must have been respected, or it must have had price respond to this area at least one time. So if price comes up and hits something and bounces off, typically not going to consider this an area of support or resistance, because it's just, like I said, noise. It's one bounce off of it. Okay, that can be supply and demand. That can be a very key level to watch, and that can be something important to use in your trading. But as far as support and resistance goes, that's not going to be the case. So something that's support and resistance, the first characteristic, I will take at least one touch. As you can see here, one touch, two touch, bang, valid. This is now a valid area of support resistance, and I'm going to watch this next time price comes. And as you can see, price came down, respected it again. On the daily chart, this is a big move. This is 40, 50 pip move right here. A lot of money to be made off that. It's $400-500 on one standard lot alone. So price came up. What do we have here? Strong candle move, broke it. What did price do? Come right back up to retest it, and now we have it established as resistance. Look at that. If we come back to now, price responded to it again here, and then it broke through and turned into a little bit of a messier area, but you can see it's still responding, still reacting. So, first characteristic of a major support and resistance is going to be at least two touches to establish. So we are going to need at least 2 times of price hitting this area before it is considered established or valid. So that is the first characteristic to a strong support and resistance level. The second characteristic, another very, very critical thing when looking for these areas, is going to be price hits this zone and then makes a strong move away. Okay? So as we can see here, on this second touch that made this zone valid, look what price did. It spent a couple of weeks moving away from this zone. That is a very, very, very strong sign that this zone is being watched by multiple people. And that's, at the end of the day, that's what we want to find in trading. We want an area that multiple people are watching and reacting to, because that's what moves the markets. Filled orders, trades that are already made, don't move these markets. These markets move from unfilled orders, from orders waiting to be triggered and waiting to be filled. So if we've got eyes down here watching this zone, and we know that orders are going to be triggered once it hits it, well, then that's a zone we want to watch. That's a zone we want to be behind with those orders, with those banks and institutions, riding that move with it. So after this price hit this zone, strong move away. Price hit this zone, strong move away. Now again, here it did finally break through, so there wasn't too strong a move away, but look what it did when it broke through. Look at that move it made away. Huge move. Huge move away. That's 500 pips or so. That's what we're looking for right there. So that is going to be a big deciding factor. Price came up, struggled to reach it again, but threw a shooting star candle here and boom, sold off. So that's the second major characteristic we want here for a good key level of area support and resistance is strong move. Strong move away from the zone. Jeez, my typing's horrible right now. Sorry, guys. Okay, so that's the second thing. Strong move away from the zone is something that we want to watch for, because, like I said, it shows there's institutional buying or selling going on there. People are watching it, and when price comes back, it's likely to respond again in a strong move away. Whether it's a break through the zone or a respect bounce off the zone, it's going to make a strong move again, most likely. Now, nothing in trading is for sure. All we want to do right now is line up our highest probability of things happening. Okay? So the third characteristic is going to be what we already went through with the retest, but a good key level to watch for the future is going to be one that's acted as both support and resistance. So acted as both support and resistance. So to go over this again, basically what this is saying is, let me make this a little bigger here for you guys. When price reacts as support finally breaks, and then we see it reacting as resistance, this is a key area. This is a strong area we want to watch. It's something we want to be aware of when price comes back to it, because again, this is respecting as both support and resistance is being watched by multiple people, and there's a high probability price is going to respond again when it comes back. This is the retest. This is support becoming resistance. This is another very key aspect of technical analysis here with support and resistance. So now, that takes us to number 4. Fourth characteristic I like to use that, well, let's go back for a second. The third one here, acting as both support and resistance, although this is very big and this adds a lot of confluence to an area when we find it, it's not 100%. It doesn't always have to be there. It doesn't have to be a second touch to something or a second time it respects it, because as you can see here, this is a huge bottom that price made right here, and on the daily chart we just see it hit once. I'm sure if we break it down to a smaller time frame, we'll see a couple tests to it, which could help us validate that a little more. See, we would have to adjust this down lower, but this is going to be a major swing low. This is going to be an area price bounced off of. It's unable to break. It's taken a while to move away from that zone. When price does eventually come back to that zone, this is an area we want to look for. Although it's not acted as a resistance, at least in the near past, although it hasn't reacted as resistance, it's still an area we want to watch. It's still an area we want to see if it makes a second bounce off of as support. That's a good area. Doesn't have to necessarily act as both support and resistance. That's just another factor to make it more dependable. Okay, so that brings us into the fourth one. Is another thing. Doesn't have to be there. It's just another factor that when it is there, the probability is higher and you have a higher chance of it working out. And that's going to be a psychological number. So when these support and resistance levels happen to fall on a psychological number, or what exactly a psychological number is a whole number. Right here, we've got price at 1.6200, right? That's a whole number. Price failed to break it, shot under. And although these are zones, not numbers, if it lines up on a psychological number, this zone is strong. So the logic behind a psychological number is humans are trading, and although there's a lot of algorithm trading and computer trading, humans make those algorithms and computers, and humans tend to react more to whole numbers. Whether it's banks placing trades, traders placing trades, or like prop traders, trading companies I work for, whole numbers are typically used more often in trading than not whole numbers, than regular, these numbers in the middle of the pack here, 61574 or whatever. These whole numbers is just the herd psychology. Traders watching this area, it's going to be responded to more. Like the Dow Jones breaking 20,000 points. I mean breaking 20,000 points. That's huge. It means nothing. It means jack shit, nothing. But because it's a whole number, it was made into a big deal. And people were watching it and responding to it, and people were selling off when it hit it or buying when it broke through. And that's just the way trading works. It's a mass psychology thing. All millions of traders and banks and hedge funds and this and that watching these charts and these price levels. So when there's a whole number, it tends to react more. So when you have a whole number area that happens to land on an area of support and resistance, this respect to this here, we go back in time, bang, look at that. We have a zone here. And although it's not perfect, although price jabbed below it, jabbed above it, look, that's a zone. Huge candle broke it, was support, then resistance, here resistance. This is a major zone. You can clean it up going to smaller time frames and all, but that right there is exactly what we're talking about. Strong moves away, was hit twice, big candle broke it, acted as both support and resistance, all on a psychological number. You better believe, next time price comes up here, I will be watching very closely for either a breakout above this, entering a high base pattern, or maybe on a news event looking for a reversal. This is an area that now I want to watch because I know there's a lot of other people watching. There's a lot of orders trapped up here. There's a lot going on with this area that I want to be watching. Okay, so that is the psychological numbers aspect of this coming into play. And I lost all that there somehow. Let's see here. So that was number 4, and number 5 we have is the time period. So what that means is a couple things, and they're a little contradictory, but bear with me here for a second. So oftentimes you'll hear on financial news radios or Bloomberg, Fox Business, whatever, you'll hear a support or resistance area. Oil hit a level that it hasn't broken in 3 years, or the Nasdaq, or the S&P, Dow hit something it's been holding for 3 years, whatever. This, yes, is going to be a strong area to watch, and as you can see, this is a strong resistance. It's a psychological number, 1.8000, and as you can see, back in September of 2015, this high was established. So if price comes back up here, yeah, we're going to watch this big time. We're going to really want to watch to see what price is going to do at this zone because it's a lot of people when we watch it, they know, humans know that last time price was at this zone, it failed to break it and it sold off big time for months afterwards. And if price has not gotten back up there or been able to break it since. So this is going to be a key area to watch. The time comes into factor here because it is a high that's held since 2015. Back here, you had 2015 back in April. This was a low established. Price comes down to here. That's going to be a big time area because it hasn't been broken since April. Let me watch that. Let me sell when it gets past it. Let me buy when it touches it. This is going to be a big area that, again, is going to be watched by a lot of people, which is what we want to find. We want to be in when others are in. We want to be out when banks and everything else are out. So this is a big area to watch. However, with that being said, a lot of people think when you do support and resistance, you're going to want to zoom as far as you can out of the chart and find, oh, look at how price had a really strong support zone here. Okay, that's great, that's wonderful, but if you come up to more recently and price is just chopping through it and it means nothing, no one cares about that. No one cares about this zone back here in the middle of the chart in 2014 when whatever happened. No one cares about that. Yes, massive swing highs, massive swing lows that set highs and lows that weren't broken, those are key to watch. But aside from that, we want to watch more recency bias. We want to watch things that are more recently respected. Things like here. Look at this zone. Double top resistance, gapped to break through. Price tried coming back under closing, couldn't, broke out. Now it took off so fast through this zone, we never got a retest. Price never came back, tested as support. But you can see when price does come back down to here, better believe I'm going to be watching it. Because look at this. Strong move away, rejection wicks. Boom, broke through, went all the way up to here. That's a key level, that's a key area, and it's recent. It just happened. So there's more eyes on it than what happened 3 years ago over here somewhere. Okay? So we want to be watching recent stuff, recent moves, recent price action. And although, yes, the time a 3 year ago resistance is going to be strong, if it's been broken and stuff since then, who cares about it? We want to find swings that are held for a long time. Again, look at this guy right here. Double bottom, on a psychological 1.4600 number. Look at that. Not kidding. It happens constantly, day in and day out with these markets. Look at this. Price hit it twice. Strong move away there. Strong move away there. Hasn't come back since. Now, history tells us price will eventually be back down here. It could be 5 years from now. It could be 3 months from now. Who knows? But all we know is price is likely to come back to it. And when it does, it's going to be watched. It's going to be followed, and it's going to be most likely respected. Okay? So you want to use recent periods unless it's a major, major swing high or swing low. And then one more thing I want to throw into here is rejection wicks. Another big thing that I look for in these zones. And as you can see with this one here, you can see it up here, see it here. Again, see this no longer is very valid because look at all this choppiness through it. So that's a zone we want to delete. But then you see here, look at this. Price hit this multiple times. Look at these wicks. Look at all these wicks up here. Failed to break it. What this is showing is a story, okay? This is showing buyers came in, tried to push price higher. Overall, sellers won. We've got a shooting star candle, and look at the sell-off. Bang. Huge rejection wick. Look at these wicks failing to go through it, failing to hit it, failing to hit it. Yeah, back here it was broken and stuff, but more recently it's been established. Price came to it, massive candle broke it, rejection wick, retest, resistant, turn support, failed to break it. Rejection wick. Hitting it now, rejection wick. Whether it holds or bounces, we'll see. This is a perfect example. Rejection wicks are another very key thing. So we've got 6 characteristics here that are going to be big characteristics that we want to look for to establish a strong support and resistance. All right. Now that we have these here, what I'm going to want to do is go and show you just how I draw these areas. Write this down real quick. Pause the video and write these down for future reference. You can watch this video over and over again, but just write these down so you have them here, future reference to go back to and follow as I'm showing you how to mark these, because I'm going to take some clutter off the chart here. Give me 1 second. Sorry about that there, guys. Okay, so now I'm going to get into how I draw these. Now, just like with anything else in Forex and any kind of trading with technical analysis, the lower the time frames you go to, the more noise there's going to be. And the more invalid and basically unreliable these areas of anything are going to be. Whether it's moving averages, support resistance, supply and demand, candlestick patterns, you name it, the smaller the time frame, the less effective and reliable and probable they're going to be. That being said, when we're doing our support resistance drawing, whether it's trend lines or horizontal or anything, we are going to start with higher time frames. Now, the time frames you use depend on your trading strategy. If you're trading the 15-minute chart, you might not care about what the weekly support and resistance zones are because, I mean, you're trading 15 minutes. That's a totally different world. But with my trading, I'll trade the 4-hour and 1-hour charts. Sometimes maybe I'll jump into a 15 for a news event to find the right level, but mainly the hourly and 4-hour. So what I'm going to be doing is starting on the weekly chart. From the weekly chart, I'm going to go down and use a top-down approach using this weekly chart to begin with. So what I'll do is I'll identify the key areas, right? Looking for here. Go to more recently. Bang. Rejection wick, strong moves away, big candlestick broke, retested, rejection. So here, what I actually do is I use the horizontal line like this for the weekly chart. So there's going to be my weekly. And again, because this is not an exact area, all it is an exact point, it's just an area. What I'm going to do, personally, a lot of people do this their own way, but this is how I do it. I'm going to find the area of this point where there's the most things touching it, okay? So as you can see here, we've got one wick failed to break it. Wick went through, candle failed to break it, wick went through, candle failed to break it. So I'm going to use wicks and candlestick bodies. I'm never going to draw this, like, say I'll draw in this area, I'm never going to draw it here because, as you can see, this candlestick is above it. So that's not resistance if it's below the close of the candle. You're going to want to be resistance and support. You want to touch as many wicks as possible. So I'm going to get low down on the top of that candle close so that it's touching this wick, almost touching these wicks here, touching that wick, this wick. If this forms a wick, it'll be touching it. I want it to touch as many areas as possible. And then what I'm going to do for the weekly zone is put a little box around it. Now we don't want this to be big because when we get on the smaller time frames, this box is going to be huge. I'm going to make the box correspond with the color of blue. And to make this easier, what I do is I copy the box. So that with the next line, I'm going to go down here and look at this. Wick, wick, support, support, resistance, wick, wick, big candle broke it. This respected it, tier 2, big candle broke it, right? So we have resistance, resistance, big candle broke when price did come back to it, support multiple times, and then boom, shot away, right? So that's an area that I want to watch. I'm going to paste the rectangle, put it there. It's another major area. And then let's see where else we can put one. We'll put one right here as well. Up tiny, right around there. Now this candle is breaking it a little bit, but if you see more recently, we had it respect, big candle break, came up and retested, sharp sell-off. When it did finally come back to it, huge bounce off with a bearish engulfing candle, bounced right off it there. Another strong zone. Now, you could go crazy marking these all over, but there's really no point. By the time price comes back up to this area, I'm gonna have to analyze these charts again because it could take months and months to get up here. Same with below this level down here, it could take months and months. So I'm just gonna pretty much put a ceiling and a floor on the weekly chart of price because every week I'm gonna double check these charts. Every month I'm gonna fully go through these charts. So I'm going to update them again. For now, I don't want to clutter the charts with a million lines, and I'm going to keep it like this. So you see we have our weekly zones established. Now, since I'm using the top-down approach, and these are going to be more likely to react than the smaller time frames, these are stronger levels. They're going to be in blue. They're going to have the box around them. That way, when I'm on the smaller time frames, when I'm on the hourly chart, and price is near this, I know, okay, this is a strong area. This is a weekly zone. It's blue. I know it differently than an hourly one. I know it differently than a 4-hour one. I know it differently than a monthly chart. And that's because of the color code. You can set any color code you want, but color code them because it helps big time. So now what I'm going to do is drop down to the daily. Now look at this. Now we're on the daily time frame. You can see how much this really did respect it. And although, yeah, it's choppy here, price came up and then back under, we know that on the weekly it respected it. So these are strong levels. It's hitting this again. This is strong. Okay, so what I'm going to do on the daily is try to basically get a magnifying glass here and zoom in on some more smaller key levels. All right, so as you can see, even right here, let's see if this is good. It was broken and it's kind of choppy, but this could be resistance. Big candles broke it. Yeah, no, I don't like that. See how I threw it and then analyzed it a little more? Didn't end up liking it. Okay, so come down here more, right there, bang. I don't care what happened to it back here, because this is the past, and although we use the past to predict the future, this is nothing. It means nothing. Right here, look at this. Double top, bounced off, came up, big gap through, tried to come under, bang, took off. This was the French elections right back here. So this was a news gap on the weekend. But that's a perfect example of what kind of strength it takes to break these zones, right? So that's a perfect example right there where I'm going to want to draw a daily zone. And then I'm going to want to come draw another one. Right here could be one. Because we have resistance, shot off super hard. Price came back up. Big candles broke through. Tried to close back under here. As a retest, failed, shot off. Came back down, hit it, shot up. That's going to be a support zone right there next time price comes near it. Alright? And you can continue to do this with really, I mean, I don't want to say as many lines as you can, but if there's valid ones all over the place, then yeah, keep going with it. But usually you're forcing them because you just want to make some. So like here, this could be on a smaller time frame, maybe one, but alright, let's just leave it at that for now. Those are some major areas. Now, we could even go as far as down to the 4 hour. This is the lowest time frame I'll go to draw these support and resistance because it's just noise after that, like I said before. And now we've got here, look at this. Boom. Support, moved up, support, moved up, strong break, came back up, wick, failed to close above, bang, all the way down below. This, perfect example on a 4 hour chart. This could be used for entry, this could be used for take profit, stop loss, many uses you can use these for, many uses, right? So then we come down here, and we could even use this area. It's a psychological number right here of 1.5350. Boom. We've got resistance, 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 wicks, resistance, strong break. Price comes back to this, it's most likely going to respect it. Not guaranteed, nothing in this game is, but it's most likely going to respect it. So that's down to the 4 hour chart. Now anything below the 4 hour chart, on the hourly chart, as far as support resistance goes, now you can use it if you're trading smaller time frames, this and that, but they're going to be less reliable. You're going to need to depend more on other things in your system. So what I do is I'm mainly going to use the daily and the weekly for my trades. Mainly the daily. The weekly I'll use for other factors, but the daily is where I'm going to mainly look for my entries when I see things happening around the daily time frame. And as you can see, when we go down to this smaller time frames, I can easily tell what's a daily support and what's a weekly support. Bang, red is daily. Bang, blue is weekly. See, it's perfect. It's easy, it's visually appealing, everything's organized, it's nice. So now, I even threw black in for the 4 hour. So now what we have is an organized, nice chart, right? We've got blue weekly support with the zone, because it's, zone. The red daily support, resistance. And again, it's not an exact thing, so when you see this line violated here, when we come into the smaller time frames, you know that that's not a big deal. It's a zone, right? It is a zone in here, not an exact point. So let's go back in time to here. Before this was broken, these are the trades that I take that end up being losers, which is totally fine because it's part of the game. But you see, this is a high, resistance, resistance, price came back up, broke the resistance, but then shot back down, stopped me out. Perfect example of the kind of trades that end up being losers. But look, I lost 20, 30, 40, 50 pips in here, that's fine. Because when I come in and trade it here, price breaks it, or let's say here it breaks it, doesn't hit my stop. Look at this. Boom. What's that become? 100, 200, whatever pip winner? That makes up for 5 of these losers back here. So that's what the whole purpose of these zones are for. If you're wrong, you're not wrong by that much, thanks to position size management and stop losses. When you're right, there's no end to how right you could have been here. Eventually you hit a top, but you trail your stops, you take profit, and trail the rest. Look at this. Look at this move as opposed to this small loss in here. That is why we follow these zones. That is why we look for the key ones only, because when they break, they break. And when they respect, they respect. So that is a major area here for why we want to watch these zones. So, all right, guys, I'm going to wrap it up here. Stay tuned because I'm going to be releasing a lot more content like this in the future now that I've got moved into the new office and everything's all set up. I've got some more time to focus. I'm trading with 2 companies now, but I've got some more time to focus on releasing this content. See what's going on here with this, and yeah, keep an eye on it. Subscribe, like, stay posted to my Instagram, core.fx, my website, CoreFX Trading, and stay posted for more free content down the road, and message me to become a student of mine if you like what I do. Thank you very much, guys. I appreciate the support and taking the time to watch this, and I will talk to you soon.